Hello, I'm Felicia Jackson.
And I am Giulia Bottaro.
Welcome to Shake and Not Burn. Every day we're bombarded with headlines of crisis and disruption, from climate shocks to inequality to AI upheaval.
But behind the noise are choices, patterns, and opportunities. What we need is sustainability literacy, the clarity and confidence to interpret complexity, see trade-offs, and make decisions.
Our podcast goes beyond the headlines to uncover how real people are tackling change and what we can learn from them.
You can use these ideas to stay steady, even unshakable, in a world that feels uncertain.
This is Shaken Not Burned.
Welcome to Shaken Not Burned. I am your host, Giulia Bottaro. Carbon markets are intended to be the backbone of climate finance, but they're often criticized for being opaque, inefficient, and riddled with credibility issues. For KlimaDAO, a decentralized autonomous organization, blockchain could be the solution. By tokenizing carbon credits and putting them on chain, KlimaDAO promises more transparency, liquidity, and crucially, accountability. But does it deliver? And what does it mean for the future of climate finance if the markets themselves are being rebuilt from the ground up? We discussed this multifaceted topic with Alex Taylor, co-founder at KlimaDAO and Carbonmark. Hello, Alex. Thank you so much for joining us today.
Hey, Giulia. Thank you for having me. Looking forward to our conversation.
Why don't we start about what drew you personally into this work and what problem were you trying to solve when you started the company?
Before kind of moving into the blockchainy space, I was working in the energy markets for a while in sustainable energy and about the carbon markets through that work. In 2020, set up a carbon credit trading organization with a couple of guys I went to graduate school with in Germany and got to know the carbon markets quite intimately just by being active within them, and learned a lot. Very fun. I think there were a lot of opportunities to be successful, especially around that period of time, because the carbon markets were kind of starting to become relevant. 2019, 2020. They were relevant before, but people were really starting to use them. You know, net zero pledges were becoming. Carbon neutrality was something that a lot of companies in Europe and America were kind of aspiring to. So got exposure to the carbon markets. I think as part of that, we learned about some of the challenges firsthand, and sort of thought, well, technology could have a role to play here in addressing some of these challenges that we have. And if they're challenges that we're having, others must be as well. We kind of learned the pain points and tried to apply some research and development around those pain points. And that's led us on to a long journey around Klima and Carbonmark and all the sorts of things we've been doing over the past 4 years or so.
What were the major challenges that you were encountering and how were you solving them with blockchain?
I think from a very, very practical perspective, because we had an organization that was trading carbon credit, the process of sourcing carbon credits was difficult. The process of finding buyers for carbon credits was challenging, and the kind of general operational overheads of operating within the market were also quite high and quite difficult. To kind of summarize this, the life cycle of a carbon credit, if you're a trader, you will go out to the market to try and source some carbon credits, which will typically involve a research process, creating the profile of carbon credits that you'd like to offer to your customers. And then you'll call up project developers and you'll try and actually find liquidity that you can bring onto your books. And then on the other side of the market, you go out and try and find buyers. Then you might be offering some consultancy, you might be trying to find other traders or brokers to buy your liquidity off of you. And then you'll settle those transactions on a third-party piece of software on a registry every time you find a buyer or seller. You're always on the phone, you're always sort of trying to find carbon credits, find buyers and kind of transact these credits across the market. Kind of a bit abstracted away from the sort of climate change conversation when you're doing the day-to-day kind of trading within the carbon markets. the idea was if we can kind of create a piece of technology that can very efficiently kind of demonstrate to the market what credits are available in a very transparent way, and also allow the market to kind of tap into that transparent liquidity and transact it across the market, be much more efficient and kind of create more of a sort of self-serve environment for the carbon markets rather than a very OTC traded market. So really, a kind of trend we've seen in a lot of markets, move on to the kind of internet, move on to the technologies and marketplaces that allow commodities or products or services to be traded very quickly. The carbon markets are still a long way from that efficiency that we're used to in most other markets.
It sounds like everything is done in a way by hand, right? The
Yeah.
trader finds the seller or the buyer, where in other markets things may be more automated. But so because of there's been issues with the trustworthiness of the carbon markets, and maybe we can go into it a little bit later, I'm wondering if you're automating, is there a risk of further exacerbating those issues?
Yeah, I think that's a fair challenge. I think there's two issues that the carbon market is coming to terms with, and they're criticisms that the market has had over the years. In 2025, it really is getting to grips with these issues. The first issue is the supply side integrity of carbon credits. So a carbon credit is issued, it's on the market, it's tradable. Does that carbon credit have the impact that it says it does? Is that carbon credit additional? So is the finance that credit is attracting, is it required to scale up this technology and create that climate benefit? The second bunch of challenges within the market, I think, what we call demand side challenges. So it's that notion of the market being traded by hand, so being an over-the-counter market. It's all the problems that come with that, which is very opaque pricing, fragmented liquidity. So it's very hard if you want to come and access the market to find the credits you might want. These demand side challenges, I think how they manifest is an environment where project developers, the guys who are doing the work, aren't able to fetch a good price for their credits because they are price takers. So they will have to accept a price from an intermediary in the middle of the market.
So they don't set the price.
They have to negotiate their prices, but they're not. Often what we found is they're not in a very strong position to negotiate good prices. So they're not generating as much revenue as they could. A lot of value is squeezed out in the middle of the market as opposed to through graders, brokers, the type of company that I was operating, as opposed to the project developers. And I think that's also happens on the demand side, right? The corporate users of carbon credits, the guys who are really investing into carbon credits, investing into climate finance, they also don't have a good sense of the kind of true price of a carbon credit, right? They're also price takers. They might be told this credit costs $10. It might have cost $1. The project developer might have received $1 for the issuance of that credit. $9 kind of taken out of the market that could have gone more directly to the project developer from the corporate. I mean, the $1, $9 kind of example is perhaps a bit excessive, but there's some good sort of data in the market that shows, the markup across the carbon credit value chain can be 100%, can be in excess of 100%. If that 100% of value is not going to the project developer, where is it going? And is it going to climate finance or is it going to a profit line somewhere?
Yeah, maybe we can just explain, you mentioned earlier the concept of additionality, which is, correct me if I'm wrong, that forest needs the money of the carbon credits to be kept. It's not that there is a forest and then someone says, okay, now we're just going to sell the carbon absorbed by this forest. It's just a project that needs that money to be maintained. So that means the money is additional, right? It's actually going into climate finance. Otherwise, you can just leave the forest as it is.
Exactly. The concept of additionality is one that if something's non-additional, it could otherwise generate the funds could be through revenue generating activities, could be through government subsidy, to have that climate impact. If there's no route for a project to draw down funding to protect the environment, then you could say it's additional if that project receives that funding. So it's, an important concept in the policy world as well. All energy sustainability policy should be additional. Otherwise, it's kind of could be argued to be a waste of government funding, and it's the same theory in the carbon markets. There's a couple of examples of where the market generally accepts there's non-additionality or less additionality. Renewable energy, for example, is considered non-additional most of the time nowadays because in fact the UK is now demonstrating this, right? We recently learned that we're generating the majority of our energy from renewable sources. So if renewable is now cost competitive, if it can fetch a good price and get integrated into the grid, definitely shouldn't be receiving climate finance because it should now be able to scale. And you're seeing that in China, India, Pakistan now as well. And then tree planting was something that used to be quite trendy in 2010s, I guess. People thought if we go around and plant trees and try and develop the green spaces in the UK or elsewhere, perhaps it's less of an additionality question, but is it kind of verifiable that those emissions are going to kind of be mitigated or removed in the case of planting trees, and possibly not, because there's no way to really kind of keep up with the impact of these trees as they grow and develop. When we're in the carbon markets, we need to be aware of, is impact really happening? And if that impact is questionable and someone's paying for that impact, then there's a risk that, the integrity of that carbon credit will be challenged. So yeah, we need to be very careful around these kind of key terms of additionality and verifiability.
So my example of the forest maybe wasn't the most up to date. Are there any other than, what are the main type of credits then? What projects do they come from?
Well, no, I think forest is a good one, because forests are the challenge that the market had to come to terms with in 2023. There was a slew of articles from the Guardian challenging the REDD+ standard or methodology. The fundamental debate there was around baselining and the kind of methodological process around a REDD+ credit. So if you are protecting a part of the Amazon rainforest, for example, to try and generate a REDD+ carbon credit, which is reducing emissions from deforestation, how do you determine the true climate impact of that activity? Because you're protecting the rainforest. You're not necessarily growing new trees. So you need to have a very solid understanding of what the baseline degradation of the rainforest would be, so that you can try and calculate the additional benefits that the climate finance will deliver if you protect that rainforest, which typically from logging a lot of the time is one of the threats for the rainforest. So it's perhaps less of an additionality question when it comes to REDD+, although some people could might argue it's around additionality. But it was, for that specific thing, it was around overcrediting. And if that baseline is incorrect, if that theory around how much of the rainforest would actually be protected through the climate finance, if that's in question and you put your baseline too low, and then you're creating an extra delta in climate mitigation, but then that baseline's proven or challenged, you can really challenge the value of hundreds of thousands of carbon credits and hundreds of thousands or millions of dollars. And you're kind of saying that those credits have been issued out of thin air. What happened with forests in South America and around red, I think is a really relevant conversation within the market. And you've seen the market suffer around that kind of credibility challenge. And you've been seeing the credit prices of those types of credits really suffer as well. They could have been trading at $7, $8, $10 2021, 2022, and a lot less now. I think that is a relevant point to make. In terms of sort of credit types, though, to answer your question directly, there's a lot of different types of credits nowadays. I think it's, again, one of the challenges in the market. You've got kind of plethora of different credits and technology types you could choose from. Renewables and mitigation like carbon credits. So when you're mitigating the use of fossil fuels by displacing fossil fuel technology with whether it's energy efficiency, renewable energy, etc. There's a lot of those types of credits available in the market. I think they're a bit out of fashion nowadays. There's a lot of nature-based solutions. The Red Plus nature-based solution, is kind of a quite well-known credit type, protection of the Amazon rainforest. But there's also afforestation and reforestation credits. There's mangrove credits, which kind of fall into nature-based solutions, but also blue carbon because it's related to the ocean. But I think the real bright spot in the carbon markets today, and a technology type that's getting a lot of attention and a lot of praise as well. I think it helps address some of the challenges that the carbon market has historically faced around kind of credibility and impact. Is carbon dioxide removal credits. So those are credits that kind of take carbon out of the atmosphere and fix it somehow into the biosphere, or perhaps in storage, geological storage. So that could be as simple as reforestation and fixing it through trees, but also more technical processes like direct air capture, like biochar, ocean alkalinity enhancement. And yeah, these are the credits that the market's sort of moving towards, I would say, at quite a rate. So you're seeing a delta in price, talking in price terms, you're seeing a delta between those older methodologies and approaches from the 2010s and the newer approaches like carbon dioxide removal. Huge price deltas now growing between those two type of credits.
Very interesting. So going back to Klima and the blockchain, how does Klima work, and what's the promise of blockchain? How is blockchain solving the challenges that we discussed?
What we set out to achieve was an end-to-end system for carbon credits on the blockchain. As I was saying earlier, try and address those price points and the demand side of the market, the trading infrastructure in the market. Klima's been on a journey. You introduced it as a decentralized autonomous organization for one, which is how we launched. We launched as a kind of true Web3 project. The idea was to couple governance and incentives to carbon credits. So incentivize the tokenization and trade of carbon credits, but also create like a very transparent governance process in terms of decision making around the project. And I'd say we had success. We tokenized 25 million carbon credits. We generated a lot of liquidity for those carbon credits. And what I mean by generate a lot of liquidity, I meant those credits that were tokenized were brought onto the blockchain and they were tradable on the blockchain at a clear reference price determined by the market and without barriers to entry. So if you were on the supply side of the market, you could sell into that liquidity. And if you're on the demand side of the market, you could buy into that liquidity. And there was no intermediary in those transactions. The theory of that is really effective and has been demonstrated very well in lots of other markets that have seen tokenization take off. You kind of create this disintermediated, very transparent kind of value chain and allow counterparties to interact with each other directly. However, I would say a real challenge that Klima focused beyond the kind of theory of the tech was exactly what we've just been discussing, this notion of quality around carbon credits. Klima, as I think was expected when we launched a lot of those carbon credits. We'd see mitigation type carbon credits, so a lot of renewable energy credits, energy efficiency credits, and some nature-based solutions, red plus credits, and other mangrove credits, for example. But it means that Klima's launched prior to this big kind of reform that's going on in the market. So a lot of the liquidity we attracted on chain is liquidity that is less desirable, less attractive right now. And I think that generally good reason. I think it's good that the market is really coming to terms with additionality and verifiability and impact. We need to go through the process of refreshing our liquidity so that we're offering our technology to a really important and impactful part of the market, for example, carbon dioxide removal, rather than just offering liquidity around some layer of the market. So that's what we've been working on over the past year or so is a mechanism that can allow us to tokenize carbon, a much more diverse portfolio of carbon credits rather than the kind of 25 million that we tokenized 2021, 2022. So yeah, we're just sort of blending software, finance and carbon markets all together to just try and create a more transparent, a more tradable kind of ecosystem is kind of what Klima is all about. And also Klima founded a project called CarbonMark. And CarbonMark does similar things, but it's much less blockchain native, like a front end for a lot of the complexity of what Klima does. So if you go to carbonmark.com, it looks like a very traditional carbon marketplace. Will allow people to come on and transact carbon credits. And on the back end, it uses the blockchain, but it doesn't show the customer the blockchain. And that's the key learning that we've had over the past few years is I think people are interested in the blockchain. There's an understanding that the blockchain is a vertical that can be applied across markets to increase efficiency, but they don't care enough to have to go and use wallets and learn about smart contracts. If it brings them an efficiency, brilliant, they'll use it. But all of the complexity, and it is a very complex subject matter, needs to be abstracted away when you're interacting with customers and consumers. So CarbonMark really abstracts away all of that complexity to try and draw out the benefits of the blockchain without pushing the complexity onto people. So the two projects sit side by side and do similar things fundamentally.
Do you work with registries like Vera or Gold Standard to verify the credits, or how does that work?
We ourselves don't verify the credits. Typically, there's third parties called VVBs who will do the verification and validation of carbon credits, and they are both separate to market participants and the registry themselves. They're the guys who really important for market integrity. And then the registries themselves, they're kind of often have a dual role. They have the methodologies, so the methodological process to create the carbon project and kind of define the issuance of the credits. And then once a project has gone through the methodological process and worked with a VVB, the credits will be issued on the registry itself. So Vera, Gold Standard, both have methodologies and registries. And then the market participants plug into or access credits from the registry. We work primarily now with 3 registries, and there's more on the roadmap, but because we're working with software, we need direct technical integrations with registries to be able to do what we need to do. So we work primarily with International Carbon Registry, Eco Registry. We work under the Circa Bono standard, so they've got a separation between methodology and registry, and then Puro Earth, who are kind of major in carbon dioxide removal. The reason we work with them is because we're able to talk to their registries directly. What's really important when we're working on the blockchain is making sure that connection between what happens on the blockchain and what happens off-chain in the registry isn't broken, because there's something else we kind of haven't spoken about with respect to carbon credits, but the idea of double counting or double spending. So if the carbon credit, and this is something that's allegedly happened in the past, if a carbon credit is given to two companies or two users, then you've created two commodities from something that should have been one, and it's fraudulent. So with ICR and eco-registry in particular, they're both on the blockchain themselves, either a private blockchain in the case of eco-registry or on a public blockchain in the case of ICR. Very easy for us to connect up with them and really have very high integrity with our processes. I think have announced they'll be using S&P as their registry backend for the S&P meta registry, so that'd be on the blockchain, so that'd be quite easy to talk to. Gold standards, I'm not sure what their plans are right now, to be candid. But yeah, we're kind of seeing a general acceptance of the blockchain within the carbon markets that wasn't present a couple of years ago. We can connect to blockchains, to registries that aren't on the blockchain, but it's less clean and it's less efficient. There isn't necessarily risk that there will be double counting, but I think it's much more kind of bulletproof if you can kind of work with that registry directly and kind of connect up to them. There's a lot more on the roadmap for us to connect up to, but we're kind of focusing on those kind of key three registries at the moment.
So do you think that overall the voluntary carbon markets will move to a blockchain base to ensure integrity and accountability?
Yeah, I mean, I think we're starting to kind of see it across a lot of industries at the moment. The blockchain stuff has been positioned probably by the blockchain guys a lot of the time as like a silver bullet for like all markets. And I think that it's not, first and foremost. Actually, that attitude that the blockchain sector has had has rubbed people up a lot, the wrong way a little bit, and it's led to a bit of tension. What we're seeing is really been this year in 2025 is just a general understanding of the efficiencies that the blockchain can bring. Like a real growth sector is stable coins. So there's the USDC and USDT stable coins, and so those stable coins are just pinned to $1, right? For every dollar that's given to one of these stablecoin issuers, they issue $1 on chain, and it's always trades at $1. We've paid our team members in stablecoins for the past 4 years, and it's really good. We've got an international team, and you sign a transaction, and they get stablecoin in their wallet, and there's tiny fees associated with it. There's no lag time. You send the transaction, and a second later they receive the stablecoin. It's really useful. The stable coins get a lot of market share right now. Stripe now have the stable coin offering. MasterCard have been looking into it for years. Perhaps Alibaba even has committed to deploying a blockchain, and they'll be using a stable coin within their blockchain. The reason I'm talking about stable coins, they are a very clear demonstration of the benefits of blockchain. That's starting to see other sectors and other market segments move on to the blockchain. Those same benefits, transparency, efficiency, kind of instant settlement, automation. If you're interested in smart contracts and market transactions, smart contracts become really, really important and really relevant. Those things will just get rolled out across the economy as part of that process. It probably just will happen within the carbon markets, just because there's efficiency gains and there's cost reductions and there's transparency benefits. Been a hard, challenging few years for us because the carbon markets were less accepting of the blockchain than most other sectors. And now I think they're becoming as accepting as blockchain, about blockchain as other sectors. It would take years. There's back-end registry infrastructure that will have to be migrated and transitioned. It's got to cost. A lot of the most important stakeholders in the carbon markets are the carbon registries. Some of these guys are non-profits. They're not flush with cash. So how do they even get the funding to kind of back-end migration when in their view they've probably got far more important things to think about, like emerging regulation, integration with other markets, etc. Are they going to prioritize local development? Possibly not. There's some real tangible benefits that we can kind of straight around it, but in reality, it's going to be a slow process.
Is cost the only reason why some companies in the carbon markets are not convinced, or are there any other reasons why they would oppose to blockchain?
I think it's a disruptive technology because in theory, if everything was on the blockchain and they were tokenized assets and they were interoperable, the business models within the market fundamentally have to change because you make it makes the market transition away from a margin-based market where there's not an infinite, but like a sliding scale in the amount of revenue that can be generated from your kind of your given player within the market. And I think the carbon markets are aware of the potential disruption that a very transparent, interoperable market could bring. That change could be painful for lots of people. And then one of the challenges that Vera in particular made around the blockchain in 2021, 2022 was just around AML and KYC stuff, because blockchain has generally has a relationship with crypto. It doesn't necessarily have to. I think crypto it's perceived as risky from that side of things. If you're not kind of KYCing people, are they able to launder money through a token? If carbon credits are tokens on the blockchain, could they become a kind of venue for nefarious activity? I do think there's relatively simple fixes you can implement around that sort of thing. Just gate your platform, for example. But I think that was the disruption aspect of blockchain, or its potential to be very disruptive to traditional business models. And the kind of unknowns or perceived risk around tokens and how they relate to crypto, the two big reasons that the carbon markets have generally not wanted to kind of fully into blockchain. But yeah, as I said, I do think there's mitigations around those things. Certainly, I think there's a need for the carbon market to change its business model. So I'm less concerned about that point, and that's why we need to have opportunities like this to speak to blockchain in a general sense and go through that education process, because as we spoke about earlier, it's complex, it's technical, it's unknown. So until there's an upskilling, I think people will be resistant.
How does this all fit into regulation? The carbon markets span multiple countries, so that already might be a bit of an issue in terms of different regulations. And then when you put blockchain on top of that, I mean, as far as I'm aware, I'm not sure if regulation globally is catching up with these new technologies, right?
Yeah, good question. You can take it from two directions, can't you? People expect regulatory convergence within the carbon markets. And I think from that perspective, like, blockchain's just a technology. Within the compliance market, when carbon credits are traded between different countries for their NDCs, the blockchain could just be used to transact credits, transparently issue it in a supplying country in South America, Chile, for example, get it automatically issued on the blockchain, transact it across to Japan for their JCM, and it's just a back-end technology. From a facilitation of the growth of the carbon markets and that regulatory kind of convergence, they're a useful tool. Probably what's more challenging for people in the blockchain space and regulation is the carbon markets, the voluntary carbon markets, which kind of in terms of the verified carbon markets nowadays, have generally been an unregulated commodity market. The barrier to entry is quite low to come in and trade and transact carbon credits. Whereas the blockchain stuff, if there's tokens, are having an increasingly higher barrier to entry. They are becoming regulated across the globe, really. So yeah, there could be kind of a mismatch. It's probably easier to go and trade as a carbon credit trader than try and do token stuff within the carbon markets in the not so distant future. But that's good. Regulation is probably required for the blockchain and token activities to mature. And if those activities can be regulated and give people a lot of trust around their kind of governance, they could help them get accepted into the carbon market, particularly in the voluntary markets. And then for the compliance markets, for within the carbon markets, it would take time for that technology to really get adopted. The EU ETS is a compliance carbon market, where companies can trade allowances for carbon emissions. That market works, and I don't necessarily see that there's kind of a pain point or a need for blockchains to go and be applied there for the sake of it. So yeah, it'll be a patchwork, and it'll be iterative. Regulation seems to be happening in both of these markets, and the market's it just will conform to that over time.
If I'm not mistaken, Klima was involved in a scandal on zombie credits, which involved Toucan's base carbon ton pool. Can you talk about that, and how did you respond to these issues?
I think the critique was that there was an arbitrage between the kind of unissued off-chain credits and then bringing them onto the blockchain. So there was a bunch of carbon credits that they had gone through the verification process of being a carbon credit on the Verra registry. So they were verified, they were conformed to Verra's methodology, therefore, in theory, they're additional and a relevant carbon credit to be used within the market, transacted within the market. But they just hadn't been issued onto the registry and traded for whatever reason. Perhaps there were no buyers, so the project developers or the owners of those credits hadn't traded them. When Klima and Toucan launched, the process for tokenizing was to go onto the Verra registry, put in a hash, and deploy it onto the blockchain. And as I was saying earlier, what Klima did was it created these liquidity pools that created a reference price for carbon credits, and it was a liquid reference price. So a supply side player could come in and trade into it, and a demand side player could come in and trade out of it. When Klima set up the reference prices, and the Toucan BCT pool enabled the tokenization of certain type of carbon credits, it created an incentive for credits that weren't being traded or hadn't been issued off chain to be tokenized and traded on chain. The critique in the zombie credits article was that these credits may have faded out of the market anyway, but because Klima created a price incentive, they were issued and tokenized and entered into the supply of the market. And you asked how we responded to that. Actually, got a couple of things to say on that. I mean, in practice, kind of what I was talking about earlier, it was a learning curve for Klima in terms of we have to be stricter or more strategic with the types of carbon credits that we allow into our ecosystem. So perhaps just allowing an undefined amount of the Toucan BCT pool was just too generous to kind of an area in the market we should be generous towards. And our impact would have been much higher if, even at that time, there wasn't much carbon dioxide removal supply at the time. But, had we focused on carbon dioxide removal supply over kind of Verra mitigation credits, we'd have had much more impact. So everything we've been working on over the past year is to make sure we're properly calibrated for supporting different segments of the market, not just one segment of the market. And then in terms of directly at the time, I think what we said is our understanding that a Verra credit is additional, is impactful, and has a right to play in the market. And if it's issuable on the Verra registry, we'd expect that the market wouldn't challenge the integrity of that carbon credit. I think what Klima did really shone a light on a lot of the supply within the carbon markets. This was a big story at the time. We did an analysis off the back of this because we were under attack at the time. We used a data provider called Allied Offsets, and we did an analysis of all of the Verra credits that were being transacted. And those credits that were called zombie credits and were brought into our ecosystem were absolutely the carbon credits that were being traded and consumed more than any other carbon credit at the time. People weren't spending hundreds of thousands on mangrove credits. They were maybe spending 10,000 on mangrove credits and 10,000 on older renewable credits. They could offset a larger carbon footprint at a lower unit cost. So, people were really using these credits. I think the paradox around that story is we brought a significant amount of kind of transparency to what we were trading in a way that doesn't happen in the off-chain markets, and we bore the brunt of that problem, which is a problem in the market because of the we have to be transparent because everything is on the blockchain, completely public, completely auditable. So we said fair enough. I think we kind of hit back at the market a little bit, saying I think this is kind of hypocritical. The market is using these credits, and they have been through the verification process. We paid, I think, $300,000 or $400,000 to remove some of the most controversial carbon credits from our system. Carbon credits, which I would add, are still being traded today extensively. And try to kind of address it by paying to kind of remove some of the worst from circulation, and by redeveloping everything that we do to be much more considerate around the quality spectrum. So yeah, huge learning process for us. I think huge learning process for the market, even if it kind of wouldn't maybe admit it. And yeah, I think that's what it's all about, right? Taking risks, trying to innovate, and then course correcting once you understand where you could have performed better and what you should do better next time.
Thanks for the transparency. Transparency is the key word here. And just finally, I don't think we touched upon the Klima token. Can you talk a bit about that?
The Klima token, I think, was a slightly complex beast. So as we migrate our kind of technical system, the Klima token will be split into two separate tokens, and we can talk about that in a second. The Klima token itself, that we had from 2021 to 2025, did a number of things. It provided liquidity for carbon credits. So when I said we had those liquidity pools that allowed people to come in on both sides, one half of that was carbon credits and one half of that was the Klima token. And the reason for that was it would allow people to come in and trade a carbon credit for a Klima token, or a Klima token from a carbon credit, capital efficiently. Because if you had that with carbon credits in dollars, it'd be very expensive. You'd have to maintain tens of millions of dollars of liquidity, whereas with the Klima token, we issue it more cheaply than for $1. Sometimes, and sometimes more expensive for $1, and maintain that liquidity over the long term. The other thing that the Klima token, a characteristic of it, was that it was backed by a carbon credit. So every time we received a carbon credit, we could mint a Klima token. So that allowed us to acquire carbon to provide liquidity for, and create that Klima token to provide the liquidity. But it also did more than that. It was also used as an incentive. So if you held it, we wanted people to hold our token, because it allows us to kind of maintain, in theory, it allows us to maintain price stability. So we'd reward people for holding it. And then it was also a governance token. So you could vote on things through holding it. So it's a really complex beast. It was too complex. It was trying to do too many things at once. So over time, and what we're going to do now is transfer it to a much more utilitarian token. And basically what it will do when we relaunch the project will be to just use it to vote on carbon credits, on pricing. So you hold the credit, you hold the token, and you can vote on carbon credits. Plus the pricing within their ecosystem. You've got a much more constrained, much more kind of tightly parameterized token. The Klima token was historically very volatile, and I think it was, caught up in a load of different forces that made it a very volatile token, and that's not useful when you're operating within the carbon market. So I don't think people particularly want excessive volatility in something that's attached to carbon credits.
Thank you so much, Alex. I think we can conclude here the conversation, which has been so wide-ranging and so interesting. So I really appreciate you coming on the podcast. And to our listeners, thank you so much once again for tuning in. We are on all social media, LinkedIn, TikTok, and Instagram. We also have a newsletter, so make sure you sign up to that to never miss an episode. See you next week.